It seems to be time for the old guard to fight back, and one of the most interesting companies in doing so has made a slick decision this morning. Get it? Well, Shell Oils, or Royal Dutch Shell, is a Dutch company, but it's listed on the London Stock Exchange, and its shares have gone up by 27 points this morning. Okay, that's only 2%, but that's quite a lot in a world which is really clamping down from the western side of the world on fossil fuel companies. Now, of course, Russian oil companies and Middle Eastern oil companies are making hay and have been doing so for quite some time, despite the oil price having gone down by 7% yesterday. They're doing very well. It's the West that's pushing hard against the fossil fuel industry, but demand is there, and Shell knows that. Shell has a duty to its shareholders, and the Dutch court recently made a stand against Shell and other energy companies, saying that they must meet strict and quite debilitating climate change credentials that have been dreamed up by the government. Now, Shell claims that the Dutch government didn't elaborate on when those have to be adhered to, and they're saying that it's now come to light that they would have to be adhered to by 2030, which is quite a short period of time for Shell Oils and its other peers to get themselves in order. So Shell is fighting back and is going to countersue the Dutch government and try and get itself away from those particular restrictions. That's put up some confidence, and Shell is doing pretty well this morning. So oil is down by 7%. It's quite a lot, really. It's down to $66 a barrel. So maybe there's a little less demand because Russia has opened up its supply more, and Iran is now out of sanctions to some extent. But Shell is not giving up on Western oil, and quite right too.